So I think one of the things we see the most often with UK-based sellers is that they're effectively getting their bookkeeping wrong. So they come to us and they'll say like, "Oh, I've been doing this manually now," or "I pass it to my accountant and they just deal with it." And I think I'm just looking for something to speed this up a little bit. And they think
Mm.
that the only reason they need software is to save a bit of time instead of them having to go in and download the reports and stuff like that. I can see a fly flying around you.
Yeah, yeah, I'm
So
trying to
it's
maneuver to
annoying you.
listen to you and to also, yeah, it's like, but
Um,
yeah,
little
yeah,
dance in the background there.
yeah.
And so what they don't realize is that under the surface, they're actually getting their bookkeeping wrong. So we actually did a survey a good few many years ago now,
Mm.
but there was 100 users that came into the platform, and we looked at them, and 75 of those 100 were getting their bookkeeping wrong. And it was things like they were under or over declaring VAT, or they weren't reclaiming VAT on some of their fees, or they were getting things just catastrophically wrong by just taking the amount that had been paid from the sales channel and just putting that straight in as revenue and accounting for that as just sales and just counting it done for the day. But if we break
Mm.
those down a little bit further as to why they're wrong, so if we look at the VAT one, for example, so on the VAT side of things, on your income, so the money that you've received in from customers, there's basically a few ways you can get that wrong. The first is you're not separating the income out by tax rate. So if, for example, you sell standard rated goods, reduced rated goods, and zero rated goods, i.e., some standard products like a computer mouse, a keyboard, like a foam roller, for example, or a
Mhm.
zero rated product might be food or baby products or something like that. If you don't separate those out when you account for your revenue, then you'll pay too much VAT because you'll probably account for them all as 20% VAT,
Mm.
and some of those were actually zero rated or reduced rated, so 0% or 5%.